Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Thanks for tuning in to Modern Investing Techniques, episode 103. I'm Patrick in Vancouver. Today is July 11th, 2026. Let's get into the numbers, the strategy, and today's AI selected trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. BCE's Dividend Spotlight creates a TFSA income entry point for Canadians before further Bank of Canada cuts. The S&P 500 sits at 7,575, up 0.4%. The Nasdaq Composite is at 26,282, up 0.3%. The TSX Composite closed at 35,305, also up 0.3%. Wall Street is pricing in a near-record earnings season that must deliver to sustain the rally. The Bank of Canada's recent comments keep rate cut expectations alive, with markets already discounting at least one more move this year. Energy names are leading on Middle East supply concerns, while growth stocks lag on valuation worries. Benchmark data comparing the simulated portfolio to the Nasdaq is unavailable in today's briefing. Dividend sustainability screens become especially useful when rates are expected to fall further. Investors can filter TSX names for payout ratios below 70% combined with 5-year dividend growth records using free screeners on TMX or Wealthsimple. BCE stands out in today's coverage because its yield remains attractive even after recent price pressure. This approach worked well in 2019 and 2020 when falling rates lifted stable payers while growth stocks corrected. The main risk is a dividend cut that forces a re-rating. Always verify free cash flow coverage before sizing the position. Pair the screen with a same-day volume check above the 20-day average to avoid catching a falling knife. Canadian investors running this filter today would focus first on payout ratios and growth history before checking volume. The screen also helps identify names that historically held up during easing cycles. Our practice investment of the day is a simulated trade for educational purposes only. No new position is being opened today. We are waiting for confirmed volume above the 20-day average plus a close above the 20-day moving average. RSI at 14 sits at 38 near 52-week lows. The target remains plus 4% to plus 6% only on a confirmed setup. Confidence is rated low because only one factor, yield appeal, is currently aligned. This approach forces discipline rather than chasing headlines. It also shows listeners how to avoid low-conviction trades during periods without strong confirmation. Yesterday's trade review shows no newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. There is no new realized result to report today. The Motley Fool Canada Stock Screener offers a free filter for Canadian dividend stocks by yield, payout ratio, and 5-year growth. Users can run the screen directly on the site and export results to a TFSA watchlist in under 5 minutes. This tool matches the exact criteria we discussed in the Strategy Spotlight. Interactive Brokers TWS scanner flags TSX and NYSE names trading above their 20-day average volume, with dividend yields over 4%. Users set custom alerts that trigger during market hours without constant monitoring. Both tools help turn the dividend screen into an actionable daily process. Bitcoin holds above $64,000 as investors weigh U.S. crypto policy shifts. Policy clarity is emerging around U.S. crypto rules, giving Bitcoin a firmer fundamental floor than pure speculation. The suggested action is to add 1 to 2% Bitcoin exposure via a CAD-denominated ETF only after a confirmed close above $65,000. Nuclear energy stock SMR is trading under $10. NewScale's small modular reactor technology targets AI data center power demand, a secular growth driver. Place SMR on a watch list and consider a starter position only if it closes above the 50-day moving average on above average volume. Stocks are priced for sunshine and rainbows and now face an earnings test. Wall Street expects strong results, but any misses could trigger rotation out of high valuation names. Trim growth holdings by 10% if the next two major tech earnings prints fall short of consensus. Portfolio performance metrics, including cumulative return, win rate, and alpha versus the Nasdaq, are not available in today's briefing. Now, here's something that most retail investors get wrong about dividends, and it can quietly erode returns if ignored. Imagine you bought BCE yesterday expecting to collect the upcoming quarterly dividend. Your order filled at the closing price, but the stock opened today roughly 1.5% lower because buyers after the ex-dividend date no longer receive that payment. The mechanism works through the exchange's automatic adjustment, where the previous day's close becomes today's opening print minus the dividend amount. The actual gap can sometimes widen or narrow due to normal trading. Most retail investors don't realize the adjustment happens before the market opens and can be masked by broader moves. Professionals always check the ex-dividend date on the company's investor page and compare it against their settlement cycle before placing the order. The biggest mistake with dividend capture is ignoring the price drop and transaction costs. Instead, always calculate the net yield after the ex-date adjustment and only proceed if the annualized return still exceeds your opportunity cost. Before we wrap, watch for any volume spike above the 20-day average on BCE. That could trigger the simulated entry criteria. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen, the Do Positive Pod, good news in science and tech, plus one concrete action you can take. Find every show free at naranetwork.com. New to the network, naranetwork.com/start-here picks the right daily briefing for you in about 2 minutes. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you